All right, let's dive into today's deep dive. We're going to be tackling real estate investing,
Okay.
focusing specifically on financing and, what it really takes to succeed in this world.
Yes.
Our guide for today is going to be pasted text.
Sounds good.
And whether you're considering, just dipping your toes into that first investment property,
Yeah.
or maybe you're, already a seasoned pro,
Right.
get ready, because I think
Yeah.
we've got some really eye-opening insights coming your way.
Yeah.
We really want to get beyond just the usual advice
Yeah.
that you hear, kind of uncover, how to finance smartly,
Yeah.
explore some diverse options, and really understand, why people say cash flow is king when it comes to real estate.
Absolutely. It's not just about buying property. It's about making informed decisions that really align with your financial goals and your risk tolerance.
Yeah, that's a crucial point,
Yes.
And speaking of, informed decisions and the right path, let's dive into those different financing options.
Okay.
Pasted text mentions quite a few, conventional mortgages, hard money loans, private money lenders,
Right.
seller financing, and even partnerships. This is fascinating to me because it just shows you right off the bat, there's no one-size-fits-all approach here.
Yeah, that's right. Each option comes with its own set of advantages.
Of course.
And disadvantages, for instance, hard money loans.
Yeah.
While they can provide quick access to capital, they often have higher interest rates,
Right.
making them, a bit riskier of a proposition.
Yeah, so it's really about weighing those pros and cons very carefully.
Absolutely.
It's almost like, choosing the right surgical instrument for a specific procedure.
Interesting.
You wouldn't use a scalpel for brain surgery, right?
Precisely. And this is where understanding your individual financial situation becomes really critical.
Yeah.
What might be a perfectly suitable option for one investor
Right.
could be disastrous for another.
Exactly. And that kind of brings us to, leverage,
Yes.
a concept that pasted text emphasizes quite a bit. Leveraging financing essentially allows you to acquire those higher value assets
Yes.
and potentially amplify your returns.
Okay.
It's like it's almost like a financial slingshot,
Interesting. Right.
propelling your investments forward.
That's a great analogy, however.
Yeah.
While leverage can be a powerful tool,
Right.
it's crucial to remember that it's a double-edged sword. Mismanaged debt can very quickly turn into a financial burden.
Oh, absolutely.
You need to be confident in your ability to generate that consistent rental income
Right.
and manage those expenses prudently.
That's a crucial point. And
Yeah.
I think some investors might argue that, taking calculated risks with leverage is essential for maximizing those returns.
Yeah.
What's your take on that?
Well, there's some truth to that,
Sure.
especially in a booming market.
Right.
I would caution against excessive leverage,
Mm-hmm.
particularly for those novice investors.
Right.
Understanding metrics like loan-to-value ratio
Yes.
and that debt service coverage ratio is crucial here.
Okay.
These ratios can really help you assess your risk and determine whether those potential rewards actually outweigh the potential downsides.
Yeah, it sounds like we really need to carefully assess our own risk tolerance
Absolutely.
and have a solid plan, for managing that debt.
Mm-hmm.
So let's talk about, the importance of positive cash flow.
Okay.
Pasted text really highlights this,
Yeah.
As the lifeblood of any successful real estate investment.
It's true.
What makes cash flow so vital?
Think of cash flow as the engine
Yeah.
that keeps your investment running smoothly.
Mhm.
It's the net income generated from your property after covering all of those expenses.
Right.
So consistent positive cash flow
Yes.
not only provides that financial stability, but it also allows you to reinvest and grow that portfolio,
Okay.
creating this powerful cycle of wealth building.
So if cash flow is the engine, then negative cash flow
Yes.
must be a major roadblock.
Absolutely. Negative cash flow can quickly put a strain on your finances.
Right.
And it may even force you to make some tough decisions.
Yeah.
Like selling that property at a loss.
And that's a good segue into, our next point.
Okay.
Pasted text emphasizes the importance of having that cash flow cushion,
Yes.
for those unexpected expenses or vacancies,
That's right.
which really highlights the importance of, proactive financial management.
Exactly. You need to plan for those inevitable rainy days.
Yeah.
Unforeseen events like major repairs or extended vacancies can significantly impact your cash flow.
Sure.
Having that reserve fund acts as a buffer, protecting your investment and ensuring that long-term stability.
Yeah, it's all about having those safeguards in place.
Absolutely.
Right, so you're not caught off guard when those unexpected events pop up.
Exactly. Yeah, building on that idea of, financial preparedness. Let's delve into pasted texts advice for those just starting their real estate investment journey.
Okay.
It stresses understanding local market dynamics.
Right, because each market has its own unique factors at play. It's like navigating different terrains.
Sure.
You wouldn't use the same map
Right.
for scaling a mountain and crossing a desert, right?
Yeah.
So what are some crucial things to consider when analyzing a local market?
Think of it as a multi-layered investigation.
Okay.
Start with the fundamentals of supply and demand.
Right.
Are there more buyers than sellers?
Yeah.
How does that affect property values and rental rates?
Okay.
Then you look at the bigger economic picture. What's the job growth rate?
Right.
How is the population trending? What's the median income in the area?
So it's not just about the properties themselves,
Yeah.
but understanding the overall economic health of that area.
Right.
You're looking for those signs of stability and growth potential.
Exactly. And don't forget those neighborhood-specific factors.
Okay.
Crime rates, school quality, proximity to amenities.
Right.
These can all influence a property's desirability and its potential for generating that rental income.
Pasted text also recommends that beginners start small.
Yes.
What's the rationale behind that?
Starting small allows you to gain experience
Okay.
without risking too much capital.
Right.
It's like learning to swim in the shallow end before diving into the deep end.
Yeah.
You get to understand the process, build confidence, and maybe make a few mistakes with less at stake.
That makes sense. It's about managing that risk while building your knowledge and your expertise.
Absolutely.
The source also emphasizes the importance of building a network in real estate investing. This includes seeking guidance from experienced investors, lenders, and real estate agents.
Think of it as assembling a team of specialists, each bringing their unique expertise to the table. A seasoned real estate agent, for instance, can help you find those properties, negotiate deals, and navigate that often complex transaction process.
They're like your trusted guide through the real estate jungle.
Exactly.
Helping you avoid those pitfalls and find those hidden gems.
Exactly. Then you have your lender.
Okay.
Someone who can guide you through the maze of mortgage options.
Right.
And help you secure the best possible financing terms.
They speak the language of mortgages.
Yeah.
Making sure you get a deal that aligns with your goals and your risk tolerance.
That's right. And finally, don't underestimate the value of connecting with those seasoned real estate investors.
Right.
They can offer invaluable insights, share their experiences, and maybe even become partners on future projects.
It's like tapping into a wealth of practical knowledge and wisdom.
Precisely. Building a strong network is crucial in any field.
Yeah.
But it's particularly important in real estate, where those connections can open doors to opportunities you might never find on your own.
So let's shift gears a bit and talk about the financial aspect of real estate investing. Pasted text really stresses the importance of solid financial planning and budgeting.
You can have the best investment ideas, but without those sound finances, it's like building a house on sand.
Yeah.
Before you even consider making an offer, you need a clear understanding of your financial situation.
Okay, so that means taking a close look at your income, your expenses, your assets, and your debts.
Absolutely. It's about understanding your cash flow.
Yeah.
How much money is coming in, how much is going out.
Right.
And how much you can realistically allocate to investing.
And this is where setting clear financial goals comes in.
Exactly. Yeah. Are you aiming for those short-term profits or that long-term wealth accumulation?
Right.
Your goals will shape your investment strategy and determine how much you can comfortably invest.
And I imagine it's also crucial to factor in those unexpected expenses, like you mentioned earlier.
Absolutely.
The importance of having that cash flow cushion.
Always budget for those contingencies.
Okay.
Repairs, vacancies, or other unforeseen circumstances. It's like having that financial safety net for your investment.
This brings us back to that concept of debt management.
Yes.
Pasted text cautions against over-leveraging, especially in those early stages of investing.
Remember that debt is a tool.
Okay.
And like any tool, it can be beneficial when used correctly,
right,
but harmful when misused.
Yeah.
The key is to ensure your rental income can comfortably cover those mortgage payments and other expenses,
Right.
even if interest rates rise.
Sure.
Or you experience a period of vacancy.
So stress testing your investment plan is critical.
Exactly. Can it withstand those inevitable financial storms?
And keep in mind that real estate investing
Yes.
is a long-term game.
Absolutely.
Don't let those short-term market fluctuations or unexpected challenges derail your plans.
It's about staying focused on those goals.
Right.
And having the discipline to weather those inevitable storms.
Speaking of challenges, pasted text encourages new investors
to
stay informed and prepare for market volatility.
Yes.